Welcome to BetterBooks with Kathy Houston. This is the Advanced Assets Training section. We will be discussing some advanced items that will help to eliminate errors and problems with your books. We talked about linking your bank in the accounting software with the Quick Start section and in the Basic Bank Account section. Linking your bank can really improve your efficiency. However, there are times that linking your bank may not be the correct choice. Software platforms such as Shopify, Wix, Squarespace can be linked to your accounting software, but is that what you want and need? Many times, if you link the software platform with your accounting software and you're linking your bank account, you're creating a lot of extra work. Linking your bank can sometimes duplicate the transactions that you have to code and match. This is the same as using your software program for AR and AP. All of your transactions will already be in your software. There's no need to link your bank. You're just creating extra work. Basically, if you don't use AR and AP with your accounting software, you can link your software platform or your bank, but not both. My choice would be your bank. That way you are only using your accounting software for cash transactions, incoming and outgoing cash, and you don't have to worry about accounting for discounts, returns, gift certificates, etc. You're only using the platform for tracking the day-to-day business and using your accounting software for the sole purpose of financials and tax returns. For book depreciation, our assets are depreciated over the required amount of years depending on the type of asset. Such as your desk is depreciated over 7 years, but depending on the type of asset, it may qualify for accelerated or bonus depreciation or Section 179 depreciation. Bonus depreciation and Section 179 depreciation is depreciating assets for tax purposes sooner than the 7 years. And why is this important? Because it allows you to take more depreciation in the first year of the asset and take that expense against your income. As an example, let's say that you bought office equipment in the amount of $20,000. Your book depreciation expense for the year would be $2,857 if you're using the straight line method. Whereas if you used Section 179 on your tax return, your depreciation expense will be $20,000. That's a big difference. Although your tax software will calculate these amounts for you, I wanted to include a link where you could read more and learn more about this. Accelerated depreciation in Section 179 is for tax purposes only. Common issues for inventory are 1, not tracking inventory at all, and 2, not doing an end-of-year physical count. The benefits to tracking inventory are accuracy, correct carrying costs, reordering alerts, etc. Use technology depending on your market sector to make this process easy. The second common issue is not doing physical counts on a yearly or quarterly basis. All businesses should do at least a yearly physical count to make sure your year-end books are correct. 95% of the time your inventory will be less than what you're showing on your books, and this could be for many reasons: theft, damage, promotions, advertising, etc. Take the loss expense for these items at year-end. You are paying property taxes on your year-end inventory, so make sure it is correct. Let's look at what that year-end inventory adjustment will look like. I added some accounts for examples of possible adjustments. This is a reduction in inventory. If you're making an increase in inventory, the debit would be to inventory and the credit to cost of goods sold. I suggest a yearly cleanup of your chart of accounts. Why? Over time, you get duplicated accounts in your chart of accounts, and some accounts are no longer active. You might have changed banks or credit cards. You can go into your chart of accounts and make these accounts inactive. The benefit of doing this is 1, it removes accounts that are not being used from popping up when you're coding, and 2, it prevents you from accidentally posting to an inactive account. Just like your chart of accounts, you need to schedule time to clean up your vendor, customer, and items list. Doing this on a yearly schedule keeps the task manageable. This saves you time in the long run searching through vendor and customer lists, and most importantly, it prevents you from incorrectly posting to an inactive account. Depending on your industry, it may be a good time to update billing rates, product and service rates, sales tax, etc. Schedule these tasks on your calendar, just like an appointment. Congratulations on completing the Advanced Assets section. You're off to a great start focusing on some advanced topics for your books.